Back again here with another video. I know it's been a long time since I last uploaded, and I actually fell sick. I fell really sick, and I had to step back from the chart a little. And during that time, I actually took time to also work on my psychology because before I fell sick, I went through this. My psychology just quite shifted. Like I took so many losses in the market, and my human psychology just creeped up on me, and I just also just needed to take some time off to work on that. And I discovered a lot of amazing things, guys. A lot of amazing things. I discovered about how the mind works, and yeah, I mean, I always knew these things, but I never really paid attention to them with so much. I've never paid so much attention to them as I did this time, and I'm actually just learning on how to be more positive and like less complaining and all that stuff. And trust me, it actually shifted my psychology. It's nothing trading related. The stuff that I watch, I watch stuff from Bob Proctor, who recently just passed away. May his soul rest in peace, and Jim Rohn, Earl Nightingale, and then Steve Harvey mostly. Those are the motivation videos that I'm watching, and just the teachings and like how they managed to make it out in life, and why why only like 5 people make it and 95% don't make it. Like they speak about a lot of interesting things, but of which this video is not really about them. But I have the links to everything that I watch on my Discord channel. Like you can go on my Discord channel. We have like a channel called Motivation and Mindset. That's where I post every motivation videos that I watch. Okay, guys, so let's get to the purpose of this video, which is you will not need my mentorship or any other person's course after watching this video. Here's why. Okay, I'm actually gonna break down how I see the market and how I think you should start seeing the market as well. And you guys can tell I trade the smart money concept. I feel like this concept is really powerful because it's been working ever since the market started. Okay, ever since like back in the days, if you applied the smart money concept, you would have made some money in the market, a lot of money in the market. And I think it's something that you need to learn, and it's just gonna open up your eyes on how the market operates. Okay, and yeah, guys, honestly, after this video, you won't have to pay for my course or anybody's course. Like this is all you need. But the things that actually stops us is that we think that I can teach you this today, but maybe you don't have the mindset or the psychology to stick to this. Like you still, like, especially when you're a beginner trader, you want to see like who's got the best strategy, who got the, I want a strategy that enables me. I want a 90% win rate strategy. Like you're never gonna find that. You're never. I mean, there are a few, but then to apply it, like I could. Have you ever noticed that we can have two traders, and one trader has the mindset to trade and the other doesn't have the mindset to trade, and they both have the same information. One applies the information correctly and they're winning, they're making money off the market, and the other doesn't really apply it correctly and is not profitable, but they both have the same information. So I would suggest that you invest in your mindset and your psychology before you can actually start switching strategies. I mean, you need to learn one strategy, learn it correctly, and I guarantee you can twist it to your liking, and you can even like increase your win rate on it, and you just make it work for you. Really, like every strategy works. It just depends on how you apply it and how you believe in your strategy. I really believe in this smart money concept strategy, and I want to share it for free. Like after this, you will not need to pay for my mentorship or anybody else's. Okay, so now I'm gonna jump on the chart and let's get to the good stuff. Okay. So yeah, okay. The first thing you do when you open your charts, right? Number one, okay. Number one is you need to know in a higher time frame, like which direction is the market going. Okay, in this you can clearly see that we are in a downtrend here. Okay, clearly it's a downtrend. Why? Because market is making lower low, lower high, lower low, lower high, lower low, lower high. Okay, so it's a downtrend. Okay, so I'm actually gonna focus on this bit of price, not this, okay? And then I'll do an analysis for like what you can expect for this week, okay? So now, say forget about this price action. Say the market just made this move right here, okay? So what you need to do is you need to find out if there was like a break of structure, okay? Usually what I do is I'll switch to the line chart and I can see that, yeah, here there was, like, if I place this correctly, you can see that there was a break of structure, okay? We had a young BOS over there, okay? Break of structure, okay? So when the market breaks like this, you need to look for the candle that's responsible for this break, okay? An institutional candle, which is like an order block or supply or demand, okay? Like, I'm not really going to talk about supply and demand. Like I've spoken about this in my previous videos. You can go on my channel and watch those as well. But yeah, so you look for an area of demand, okay? This was also an area of demand, but it's actually not, I wouldn't really trust this. If you get confirmation to sell here, yes, you can still sell, but just know that they might sell a bit to this area, and then they decide to U-turn and go back to this premium price, okay? So now we had a break of structure, okay, and then price made its way back, mitigated back to this order block right here, okay? Once you do that, you're on the 4-hour time frame. You zoom down in time frame, okay? Like, you go to the 4-hour, okay? Just try to see what's happening better, okay? All right. So in the 4-hour, what you can do as well, you can do what's called refinement, like refining the order block, okay? You can pick like an order block inside of that order block, okay, to see what's going on, okay? But this was like a really tricky market, but there was still an opportunity here, okay? Then bam, you see, market failed, break the structure, they went up in the zone, okay? So now you got this 4-hour zone. What you can do is you can go two time frames below, okay, like 30 minutes for your entry, okay? Boom. Okay. Okay, what happened here? All right. So what you can do is, like, remember guys, I have two types of entries that I usually use. It's either MOW or a trend line break. Okay, so when I see stuff like this and then the market is in my zone, gets in my point of interest, okay, what I usually do is something like this. Place my trend line like this, okay? And then as soon as price breaks this trend line would be my entry. So that's clearly this would have been my entry, okay? And stop loss just above here, okay? And the TP, the take profit for this, like the ultimate take profit for this, is this point low, okay? Price has to go back to this minimum, this bare minimum, okay? So that's your target. But in that case, price lingered around in this point of interest for a while before actually finally going for that final TP. Okay, so for this, probably I would have probably aim for something like this, because I'm a day trader. I hardly ever swing. I want my money quick in, quick out. Okay, then look what price did. Played a little, and then we had the drop. You see, price just started dropping. Okay, by now I would have moved my stop loss to entry, okay, and then just watch the market go. And look how the market goes. And as the market is moving down, you can still also like capitalize on these breaker structures, this small breaker structure candle responsible for it. I mean, we have this order block right here, okay, and we have this one right here, okay. Whichever one of the two that gives you a confirmation, you sell, okay. In this case, we had something like this, bam, and you had this red candle right here. You could have sold here as well. Okay, so that's your re-entry. That's your re-entry, or if you had missed this move, this is where you would have joined the party. Okay, and then price moved down, broke the structure again. Okay, when it breaks that structure, all you do is this, bam. Okay, break a structure. Look for the candle responsible for that break. It's this, but you see price never went back to it, no problem. Then Before you know it, TP was hit. Okay, TP was it. No problem, no issue. You see, this would have been a really beautiful trade with a bunch of scaling and entry. Okay, but like I told you, this price, but then you would have thought that the price is actually going down all the way down to here. Okay, this is remember, this is our like ultimate TP. Okay, and then when the market gets here, what it does, now you see market, you see we make it lower low, lower high, lower low, lower high, and then all of a sudden price broke this high. Okay, price broke this high. So now this is, you started questioning yourself like, okay, maybe you tell yourself, okay, if price did this, maybe they're going back to my point of interest and then they'll move down again. But if they break my main point of interest, then I'm no longer interested in selling this market. I'm going to start looking for some buying structure. Okay, and then bam, 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 price went up back in the point of interest again. Okay, and then this could have been an entry as well. See, that's in the head and shoulder. Okay, you can enter at the break of this. You can enter at the break of this pattern. Okay, you could have entered here, stop loss above here, but what happened? Yeah, your stop loss would have been hit, but no issue. Okay, no biggie. You're not gonna win every day, but the main thing is that if you win more than you lose, you're okay. Okay, and then price move further up in that area. Okay, and then here, okay, this already I can see that it's an M formation. Okay, if I get a bearish candle near this top, that's an entry. Or if okay, now we didn't get that. Okay, so if you don't get that, then you take the breakout of it. Okay, then boom, you take the breakout right here. And remember, they're going for the bare minimum now. Now your new bare minimum would be this area right here. Okay, now let's see what happened. Bam, after the break, price just fell down. Sorry. Went down, and then bam, that's your bare minimum hit again. Understand, guys? It's just like this, bro. Simple like that. And like, look what this was quicker than this. See, this trade was quicker than this. But we also had a chance to scale in. Okay. No, there was no chance to scale in, actually. Okay, we only had like this breaker structure. Okay, there was this breaker structure right here. Okay, and candle responsible for the break would have been this candle right here. Okay, price actually never even went back to there. So in here we only would have had this as an entry. Okay, and then price fell, and then what's happening again? They went back one last time to our point of interest. Okay, see, now we had a fast move, and then price starts to slow down. When I see something like this, I can already like start placing a trend line like this. Okay, right now like this, and a break of it would have been my entry. Okay, that's the entry. But then when you get a breakout, like the breakout entries usually mitigates back before it drops. Like most of the time, that's what happens. Okay, so you mark something, you mark this candle just in case it comes back. So when you take a breakout entry, you don't risk like your full account. Like you don't risk a lot. You don't open big lot size. You open a reasonable lot size, because price can come back here, blow your account, and then go in your direction. Okay, you really have to be conservative with this. Understand? Okay, now you take the breakout. Again, your TP is the bare minimum. Okay. Okay, see exactly what I told you. Breakout, then they want to touch either the trend line or they want to go back for this to mitigate early sellers, and then before they can move. Okay, but in this case, they moved. Okay, they didn't go back all the way up to this candle. Okay, just move. Price started dropping, and it came back up a little. See, it came back here testing this level again, and then eventually just dropped. Okay, and then price eventually just dropped again. TP hit. Understand? Then you have like, you see all the trades that you had. You only had like one trade that lost, which was this trade right here. Okay, but you had this trade, Then you had this trade. Okay, this is the losing one. Then you had this one, and then bam. And remember, we still aiming for the bottom. Okay, that this bottom right here. Okay, and then when price breaks this bare minimum, obviously it's a BOS, right? It's a break of structure right here. Okay, got our BOS real quick. Break a structure right here. Okay, candle responsible for it. You can mark up this, or you can mark up this, or you can mark up this. Okay, but you just tell yourself that when price gets inside my point of interest, I look for confirmation. If I get confirmation, I'm gonna sell. Okay, in this case here, I can see if I go to the M15, you can see that this is an M formation. Okay, here it's not that clear, but even if I go to the line chart, you can see that we had the first leg, second leg, third leg. They broke the leg, and then that's when they started moving down. But if I go to the 15-minute time frame, you will see a lot more clear. Okay. So yeah, guys, that's just the thought pattern. Okay. You see, you can see that we had leg number 1, leg number 2, leg number 3. That break of it. Break of it is your entry. Okay, bam, that's your entry right there. Price dropped. Okay, then market making lower low, lower high low, and then here you would have had a scaling opportunity. Okay, we have marked this candle or this candle. Price broke it, came back to it, entry, price dropped. Okay, same thing that happened here. That's how you see these bulls on Instagram. They start the account with $10, and then by the end of the move, they have $1,000. This is what they do. Okay, but in order for you to do this, you have to have the right mindset. If you don't have the right mindset, it's really not gonna work. Okay, break of it, bam, entry. You can go in a lower time frame, or you can look for like a candle pattern like this. Entry, market dropped. Okay, and then you can just keep doing this until a break of structure, or the market gets your target, or like a new break of structure and all that stuff. And look what the market did. Bam. And then you could, this is also a break of structure. Okay, to break a structure, you can mark this candle, right? You can mark this candle as your point of interest. Okay, market never went back to it. If it didn't, then you can also mark this guy right here. Okay, you can tell yourself that that was a break of structure. Mitigation, they went a little bit above the point of interest. They gave you that M entry right there. You enter. Okay, then we had another break of structure. Market never came back, and then boom, TP hit. Okay, so like from here all the way to your TP, you would have had 1, 2, 3, 4 trades to TP. Understand? And look at how those trades, they are like no drawdown trades. Okay, because like if you look at your first entry, bro, like you enter at the break, this break right here, you had this little bit of drawdown, and then market dropped. Then here, same thing, bam, broke, entry, little bit of not even a drawdown. As soon as you enter, market played around just a little bit, then it dropped. Break a structure again, market went back to your area. This candle pattern here would have been your confirmation. This candle, but mostly this candle, would have been like your final confirmation. You enter this, and then price just dropped. See, so it's really simple, guys. It's really simple, but you just need to have the psychology for it. Okay, you need to know market direction. Okay, but this is all you need to remember. Okay, if you're trading, okay, say you are in the seller's market. Okay, all you need to do is find your point of interest. Okay, let's say market is in a downtrend, right? Bam, and then let's say that's your order block right here. Okay, this is your order block, and then price breaks your order block. All you do is you need to know where you are, which phase you are. Okay, then the mitigation back to the order block. Okay, once price gets in this area, this is your point of interest. This is where you start to get alert. This is where you want to trade now. Okay, and then all you do is you go to the lower. Let's say you were in a 4-hour time frame, you go to the 30-minute time frame to find your entry. If you find your order block in the 1-hour time frame, you go to the 15 minutes. If you find the order block in the 15 minutes, you can look for entry in the 5-minute or the 1 minute. Okay, bam. Then you target your bare minimum. Okay, you can target your bare minimum, but if the bare minimum breaks, target number 1 is the bare minimum. Okay, and then your target number 2 is the 161.8 Fibonacci area, Fibonacci zone. Okay, it's just this run right here. Okay, guys. So if you can just take a screenshot of this, if you can just remember this drawing, let me remove the thingy, the Fibonacci. Okay, if you can remember this drawing, you can take a screenshot of this. Okay, order block, impulse move, mitigation, point of entry, selling. Where am I going? To my bare minimum, and if the bare minimum breaks, bare minimum target 1, target 2, 161.8 Fibonacci area. Done. Then you go to your chart and you start looking for these things. You see, you start looking for these. See, that's the same thing that I'm telling you about. Okay, we had to break a structure, point of interest right here, price mitigation back to the point of interest, entry, target number 1, bare minimum. If the bare minimum breaks, 161.8. Done. Okay, guys, so this is really all I wanted to talk to you about, guys. And there's things like this every day, everywhere. Like, you just need to know where you are in the market in order for you to understand this. Okay, I hope this video makes sense. I actually made this video longer than it had to, but I'm coming back fresh in the market with more analysis and just more opportunity. I have my mind clear, and I actually know how to fight human psychology. Whenever I get like a breakdown, an attack like that, I just need to remember like what I'm doing this for. Okay, what I'm doing this for, and where I want to take, what level I want to get to. Okay, yeah, guys, so I hope this video was very informative. I hope this makes sense. You really don't need to buy a mentorship, or you don't need well, obviously you need a mentor to show you how to actually make your trading career to make you profitable quicker than it has to be. Because if you do it on your own, also it might take you time, but it's still possible. But if you want to cut down on all those drawbacks and like all those stresses, I advise you to get a mentor. It doesn't have to be me. You can get yourself a mentor and just listen to what he tells you and do exactly what he tells you in order for you to succeed, to become profitable quicker. So after watching this video, just apply all these concepts, but don't be afraid to reach out to me as well. I have my free Discord going on. It was kind of quiet when I was sick, but like now I'm back and forth in full motion, and I believe we're just gonna kill the market and just stay focused. Okay, yeah, so guys, like and subscribe. Free Discord in the description, and I will see you guys in the next video. Cheers.